خب والله باز بخور فرما ورا اتو شد دي بوز
امبارح دي ولا جوي كده سريع سريع مش هتبقى دوسه
كده بيبقى شوي سريع مش سريع
يو مش سريع مو لا والله
دي كاكا دي بابا
I thought that video was hysterical. I had to watch it 10 times, and here's the point. You're watching other people trade on Wall Street, and it looks as if they're moving every which way they need to move, and every turn is a win. And then you decide that you're going to step in and you're going to take a chance, and all Wall Street does is pow, 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 and your head's ringing. I don't always win. Nobody that you're following or that you're watching is winning every time. Wall Street is doing the same thing to everybody. Now, you can begin to win and you can begin to understand some of the timing of Wall Street. I'm going to tell you guys real quick, I'm going to remind you because I've shared it before, 4 disciplines that I use to recenter me right after a loss. The first one is I ask myself the question, did I trade with the trend? You guys have heard it before, the trend is your friend, and that's true. The second one is, did I use a stop loss? Now, I make it a habit to use a stop loss on every single trade. Even if I move it occasionally, it's still hard. I'm still wrestling myself with using a stop loss on every single trade. It's a lifelong discipline. Next one is controlling position size. When you begin to win, you tend to begin to put more at risk, and then you can turn 2 or 3 small wins into a massive loss. So control your position size. And then the last one, don't revenge trade. If you've made a big mistake, you got to leave, step away from Wall Street, because I've said it a million times that there's always going to be coming around the corner another fast-moving train that's going to take you into Wall Street where you can make more money tomorrow. Those are my 4 disciplines, and when Wall Street begins to pound on me, that's when I take a step back and ask myself, am I following each and every one of them? If you guys think I missed a discipline or one that has helped you out in the past, put it in the comment section to help out the family. This is the Stocks with Josh show. Thank you for joining me. Thank you for feeding the algorithm and throwing a high and a heart in the comment section. Hit that subscribe button to get notifications on upcoming videos. Okay, I want you guys to start off and listen to some highlights that I pulled from the Fed's talk yesterday. It's very simple, but I think it's important that all of us take a moment and listen to it with our own ears.
Inflation has eased from its highs without a significant increase in unemployment. That's very good news. But inflation is still too high, ongoing progress in bringing it down is not assured, and the path forward is uncertain. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%.
All right, so to keep it very simple, the Fed is watching the data, and that's what we've got to do. And so I've highlighted a couple data points that are moving the market today and tomorrow. Each of them tells a story about how the market is interpreting what the Fed is trying to interpret. Today we got the ISM manufacturing PMI. Now the previous read on that was 47.1. The forecasted data point for today was 47. It came in hot at 49.1. What does it mean? Well, I want you guys to check out this chart. If the manufacturing PMI is above 50, it typically means that the economy is getting stronger. If it's below, it means the economy is getting weaker. You guys can see with your own eyes that it has begun to curl up and the market's begun to show some strength. So here's what I want you guys to take away from this particular data point, is that when the economy shows some strength, that tells the Fed that he can keep interest rates higher for longer, which is not good for stocks. So if you want to see your stock portfolio go up, we're actually looking for weakness in these reports, not strength. And then tomorrow we've got the non-farm payrolls, and that's going to be a huge one. Now, previously there was 216,000 jobs in the month. Now there's forecasted 180,000, and tomorrow at 8:30 a.m. Eastern Standard Time, we're going to find out how many jobs were added or lost to the economy. The market's expecting a drop of 40,000 in that report. If it comes in hot, it's going to tell the Fed that he can hold interest rates longer, the market could turn around and decide that since they've already got 6 interest rates priced into 2024, that it's time for them to sell some stocks because they've been overbought at this moment. I wanted you guys to understand how these data reads were going to be interpreted by the market. All right, I'm going to have an interesting conversation with you guys about the overall crypto market here in a minute, which I think is going to give you guys some perspective of what could happen over the course of the next couple months and the next year. Before I do, let me take a very quick station break for the Moomoo investment app. Guys, if you need better trade tools, there is a link left in the description of the video as well as the top pinned comment to open and fund a Moomoo investment account. This is a zero cost to trade platform, and right now you can receive up to 15 free stock as well as an 8.1% interest rate for just leaving uninvested cash sitting in the account waiting for the right time to possibly pick up some Tesla shares in the future. Available in the US, Australia, and Canada, and the offer is different for each place. Click on the link and check out all the details for yourself. Let's talk about Bitcoin and crypto altogether. We are running out of time before the halving event. Now, if we go back in time, when we had under 90 days before the halving event, I pointed out to you guys before that Bitcoin has absolutely crashed to incredible lows only to quickly recover right before the halving event. And people knew then that the halving event would likely be bullish, yet there was a major capitulation moment. But as each day goes by, we are running out of time for Bitcoin to fall back. I'm just going to cover with you guys some places of support that it could fall back to. Right now, it's currently come off of its highs and fallen all the way back to 38,000, and that was a great support. It bounced up. It's not likely to go all down in one day. The next fib level down beneath 38,000 is 36,000. And if we're going to go down, it seems most likely that this would be the level that we should at bare minimum hit. Now, there is the potential that we could go as low as 32,000, and it should go there. And you say, Josh, why should it go there? Well, that's the top of previous structural resistance, which we now want to see become new structural support. That's typically how stock price moves. And so there's your support levels. But here's what I want to talk to you guys about what to expect out of this new cycle that we've got ahead of us in Bitcoin. We've had essentially 3 halving events in the past, and this will be the 4th. But I want you guys to understand that Bitcoin is losing momentum. Now, I know that a lot of people don't accept this. I know that a lot of people have different views about what's happening with Bitcoin, and it gets a little bit confusing. But the very first run-up in the very first halving event and crypto cycle, we had a 16,000% move up from the bottom to the top of that particular cycle. The very next cycle, there was only a 4,000% move. And then the last crypto cycle that we just got, we only got a 600% move. And so it's obvious to anybody who's spending time looking at the charts that Bitcoin is absolutely losing its momentum to the upside overall. It's not happening in 1 year or 2 years. It's happening over a multi-year time frame. Bitcoin is beginning to straighten out. When you look at many years together, you realize that initially there was this massive takeoff moment, and really in the last 5 years, we've been largely moving sideways. And so this brings us to the question of where will Bitcoin go in the next year and a half? Because the halving event is April 2024, and then sometime after that, and another year and a half, we should see the top of the next Bitcoin cycle, and there should have been a lot of run-up in price. Well, the majority of analysts, we're not talking about Michael Saylor, we're not talking about Cathie Woods, but the majority of analysts who are looking at the charts are estimating that there's only going to be roughly a 400% move from the bottom of the winter to the top of the next Bitcoin cycle. And that would put us at around $78,000. And here's the main point that I want you guys to understand. It's becoming less volatile. Bitcoin is becoming less volatile, but it's still remaining extremely predictable. If you guys have been part of this show for a long time, you know that I called the Bitcoin bottom perfectly. At the time, the main logic that I was using to determine when the bottom would occur was the cycle timeframes. Largely, the cycle timeframes, the winters, had only lasted between 360 and 400 days. And so when we were at 390 days, I said to everybody, we have the next 30 days to complete the bottoming pattern. And that, sure enough, fell and coincided exactly with the FTX fiasco. Bitcoin bottomed out, and ever since it's been climbing. Now, here's the point I want to make to you guys about today. I'm not just repeating that to hash out old victories. I'm telling you guys that we're in a similar situation. We have 3 months to the halving, okay? And in that time frame, things typically test the bottom of support. So I want you guys to be aware that we have 38, 36, and 32. And the support that Bitcoin should test if it's going to have the most bullish move going into the halving event is actually 32,000. So be aware of that. And here's the last question I want to leave you guys with today regarding Bitcoin. The question is, when are you going to buy? If you didn't buy any when it bottomed out at 15,000, the bottom line is that $30,000 and that range from 30 to 38, I don't know exactly which of the support levels it's going to hit. It should hit 32. But no matter which one it hits in that parameter of $10,000, don't miss buying any Bitcoin in the pullback right before the halving event, where we know that we're going to see a higher price in 2024 and 2025. My question is, when are you going to buy? Are you going to buy any? Let me know in the comment section if this helped you guys make any decision as to when, if ever, you are going to get involved in some Bitcoin. It is actually working totally according to past cycles. It's actually behaving in an extremely predictable pattern. And to be honest with you, I actually found it easy. I was having this conversation with Stock Up with Larry Jones yesterday about how much easier it is to trade crypto. Like that initial video that we saw at the beginning where it seems like every move you make, you're getting smashed. Crypto is actually very predictable. It tells you where it's going in advance, and it's been following the same 4-year cycle for the last decade, and right now it's perfectly on pace. I'd love to hear you guys' opinion on it. Hope this video is helpful to you guys today. We're going to continue to touch on big news. We're also going to keep talking about crypto. I'm going to be talking about some of the altcoins here soon. Talk to you guys soon. Peace and blessings. Take care. Have a great day.